Hello traders, the title of this video is Trading on the Edge Explained. Trading on the Edge Explained. Alright, so I want to encourage traders to familiarize themselves about how to use, trading on the edge. All right. One of the challenges that I face at the beginning is that I do not trade on the edge, especially if you are using the stochastic, the RSI, the MACD, the moving averages. All right. You want to know how to trade on the edge. All right. It will allow you to improve your day trading and also your swing trading. Let's begin the demonstration of trading on the edge, or begin the explanation of trading on the edge. All right. So I have here a few trend lines. So traders that have been following us probably know a little bit more about this, but I would like to encourage those traders to stay with us as we are going through everything carefully. The tools that we use, the technical tools that we use when we are talking about trading on the edge are trend lines, all right, channels, and pitchfork tool. Can I say pitchfork tool? Yes. All right. So those are the technical trading tools that we use when we are talking about trading on the edge. Okay. So because when we are trading on the edge, the risk is low. And we are also likely to trade with professional traders. Professional traders trade around key level and also on the edge. All right, very, very important. So a lot of traders can trade, but very often, sometimes they jump into the trade. All right, you don't want to do that. Don't jump into the trade. Now, you will probably hear that some trader may say to you, you wait for the trade to come to you. What I mean by that is that you are waiting for the price to come to the edge, all right, where the risk is low, where everybody else is waiting. Traders that are also using the volume bar, to improve their stock trading, you notice that most of the volume surge, all right, will take place on the edge. Those are what are called a value zone where professionals are waiting to trade. So pay attention to the red trend line. So we connect this point and this point. We just need 2 points to draw a trend line. Very simple, all right? So now we are waiting for the price. We see that trend line here. We are waiting for the price to come to the edge. Here it is, boom, 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 on the edge. Can you see that? On the edge. All right, on the edge right here. Okay, it came back. This is the third time it's touching here. So as a day trader, you can take advantage of that, because as a day trader, you don't have the whole day to manage your trade. You have few hours to manage the trade, otherwise you're going to lose. You want to make sure you get it right. And by trading on the edge, you are looking for ready-made, so to speak, ready-made trade. All right. It's like boarding a train that is about to depart, all right, or joining a plane that is about to fly. So here it is. So here it is, boom. Now, because I'm on a weekly chart, you can quickly just go to your 5-minute time frame looking for very sharp pattern, because it's at a resistance zone. That's where people look for an opportunity to sell. You can see that the price went down a few weeks before recovering. All right. So, but there is a reaction on the edge. Now, you can see that again, as the price went above that red trend line, it came back again on the edge. So we are now here. So some traders tracked it here carefully. Here he came back again and touched it here. You can see that he bounced up a bit. So first time he touched it here, you see this candle here, touch it here. You see this, the following candle was a little bit bullish. This is the reaction on the edge. As a day trader, you want to take advantage of that. The price struggled to go below that red trend line, and finally it went up a bit on the edge. Because the reason why it struggled here is because people were waiting here looking for opportunity to buy the stock. It braced above that red trend line, it came back to retest it here. So they were trying to implement a top-down trading method to trade it. But finally, as it Now, you have to understand that it's a bit, those who are trading here need to be careful, because I need to mention this very quickly because of the bearish trend line. This one here, you see, there's a bearish trend line here. Okay. Now, finally, it breaks. Those who were selling, if you were buying here too early, it's not good. It's better to let it out, break above the blue trend line, and then from there you take it up. So that's why they struggle a bit here. All right, just need to mention that. But finally, as the price dip below that red trend line, so this is what we are talking about, break below, retest, all right, boom, they sell it down, okay, on the edge. It's happening along the trend line. That's how professional traders, they are trading around trend line. Above, below, break above, retest, breaks below, retest, chin. Those are places where you want. Here again, you bounce, went a little bit fast up, only to close below it. This is a very bearish candlestick bar. This is the pin. You remember the pin? I'm talking about candlestick pattern at 24 Stock Trader YouTube channel, where I'm posting video about candlestick bar. You remember that pin? I was talking about it a few times. You see the pin with a long tail, piercing a common resistance level, or piercing a hidden key level. This is a common trend line that we already have in place, and we have the pin piercing it. This is an invitation to sell. Check those videos about candlestick bar, candlestick trading at 24 Stock Trader YouTube channel. Yeah, this is a beautiful, gorgeous, all right, bearish trading sector for swing traders and also for day traders. And for few weeks, boom, 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 go down. Are you seeing the advantage? So that trend line that we have drawn, just connecting 2 points, have been quite useful, yes or no? So in order to achieve consistent winning trade, one should trade on the edge. All right? So that trade line, okay? So here again, look here. Now he finally ran away again. That's what we're looking at. See, he ran away. He touched here, didn't manage to go up very much. Here, he finally again, after going below it, he recovered. This is another, you see here, this is a bullish chart pattern on the edge. Can you see that? A double bottom in the vicinity of, okay, a trend line. This is a validation of this zone as a bullish zone. Now, after this candle comes back above that red trend line, you want to implement a top-down trading method to trade it. Boom, 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 boom. Here we are. Okay, it ran up very fast. Beautiful. That's the way you want it. Okay, you see? On the edge. But as he ran away, so now we have a brace, a boom, and a boom. Again, are you getting the message? So you may think, George, are you getting crazy? You're repeating yourself on the edge, on the edge. But I'm trying to communicate something that is essential, something that can, okay, have a positive effect on your day trading and also on your swing trading. So you may be wondering, you see how the price is reacting around that trend line. Okay, I finished with this trend line now, so we leave it there. I'm going to turn your attention to another trend line. Okay, stay with me. So this time, so you see how I draw my trend line? I connect a high and a higher high. That's how I draw my red trend line. I will do exactly the same thing one more time. I'm going to connect this high here with another higher high. So now I have my orange trend line. Look what's happening here. So now I explained to you that the tool that we use are what? Channel, trend line, and pitchfork tool. And so far, I have not yet used my pitchfork tool, and I will be using it. So stay with us. So now, look at this orange trend line. So you see now, the RSI period 14 is overbought. Okay. And people would like to sell because the RSI is overbought, going into their mind. People are itching to sell. But if you pay attention to the orange trend line, what is happening here? The price breaks above that orange trend line and retests it now. So because today is Saturday, that weekly candle is already closed. Saturday the 10th of December 2016, that candlestick bar is already closed. So next week, a lot of swing traders will be monitoring this stock, expecting it to go up because this is a breaks above and retest. But in order to control the risk, they must use different time frame trading method. multiple time frame trading method, a top-down trading method, all right? So though the RSI is overbought, the price breaks above a key level and it is testing here. If one wants to sell, one must wait for the price to go below. Okay, one must receive a clear-cut signal below that orange trend line. So where we are now, all we can say to traders at this junction on the edge. Are we on the edge? Yes. On the edge of which trend line? The orange trend line. So priority to bullish signal above and priority to bearish signal below that orange trend line. So will that be useful for you? Because trading is all about navigation. Where are we? Where are we going? What's our position? All right? You want to map it out. It's all mapped out. So I finish also with my orange trend line, okay? But I will leave it there, and you want to know how I draw them, and I will leave it there. And we are moving on slowly but gently, and by the end of the day, you will see the advantage of trading on the edge. So this time I'm going to connect. So you remember before we were connecting a high and a higher high. A lot of traders don't even draw their trend line that way. They never connect a high and a higher high. They never done it. But professionals are doing it all the time. So another common way to draw a trend line is to connect a low and a higher low. Now we have our green trend line. See, look at this. So with that green trend line, we are waiting for the price to go a little bit up, because you see it went down. Now you see here the change of market pattern. It went down in a declining channel up to that trend line. Now it came out of the channel and then it retests this one. What are you asking for? This is an invitation to buy. Well, on the edge. Trade on the edge, whether you are day trading, swing trading. This is what we are talking about. Find a high probability trading setup, okay? Then implement a top-down trading method without violating the trading triangle and economy news. If the signal fail, come out. All right? The reason why you need to come out sometime out of trade, because you don't want to lose big. You need to have enough money in your bank account so you may continue to trade. So because you already know how to trade, you just need to be patient. So you don't want to rush and waste your money. So it's like going to war. I use this example all the time. Probably this is causing me a lot of problem already. Now, you need to have or you're going to hunt, okay? All right? Some deer, which you shouldn't, all right? And you have some bullet. You need to save your bullet for the next animal, or yes or no. So in trading, your money, all right, you need to keep your money in your bank. So therefore, sometimes you have to come out of the trade, cut the loss. All right? When I start trading, people were talking about cutting a loss. I say, well, I'm not sure, because that trade may turn around and become a profitable trade sometime, okay? It will, but sometimes it may not. So here we are. So the orange trend I show here, very useful, yes or no? Touch it here. Now here it is again. Boom. Can you see how the price? So it peels through the red trend line, bounce on it. People sold it on the edge after that beautiful, okay, pin piercing through a common key level, and they take it down to which level? Boom, to the next trend line on the edge. And those who sold it here, believe it or not, that's why I say to try to not criticize those who are selling. They are the same people that are buying. So all this hypocrisy about bearish trader, bullish trader, they are the same people. Those who are buying are the same people that are selling. So I don't know what people are talking about. Well, anyway, all right. The same people, all right. So some people need to come and trade one day so they may understand what's going on. Now, so you see, so it came back where? On the edge. Do you want more? So I haven't used my pitchfork tool. We will get there soon. So now let's draw another trend line. Very simple trend line. So this time I'm connecting. I want you to stay with me. 2 points again. This one here and this one here. And all we are waiting for now, here in rush, you see, he ran away, boom, 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 up, and then came down where? On the edge. Will you consider this as a bullish trading setup? Yes. Or I move one of my line. Let us just see it again, because Very important that we get this right, because we want to explain to traders what is trading on the edge. John, you keep saying trade on the edge. What is trading on the edge? Here it is, the explanation of trading on the edge. In fact, there is a web page I'll put in the description section at stochastic-macd.com that we title Trading on the Edge. So now we see our blue trend line that I have just drawn. You see here this point and this point. Now we are waiting for it, so it came back to touch. But this is more interesting because this is an intersection between the red trend line and the blue trend line. When you see two trend lines crossing, those are what we call hot spot trading zone. So I will be recording another video when I will talk about hot spot trading zone explained. All right, there is also a web page at stochastic-macd.com called hot spot trading. All right, so this is about trading on the edge. You see here, boom, the intersection, but this is a hot spot trading zone. This is another. You see where you are now at a hot spot trading zone. You see this zone here, this one here. Why? Because the blue line is crossing another blue trend line. This is, you see, the orange. Yeah, you see, this is a hot spot trading zone. Prior to bearish signal below the orange line, prior to bullish signal above. You see now? Is it making sense? All right. Now here it is. It breaks below that blue trend line, and now you retest it here. This is what we are talking about. That's what the price doing all the time. Break it below, retest, break below, retest, and implement a top-down trading method on the. Have I said? I think I hear you. You said it. On the edge. All right. On the edge. Okay. You get a message now. So let's now, I'm going to remove. Now you see all my drawings. And now we're going to start using Pitchfork tool. So by the way, for traders who do not know anything about Andrew's Pitchfork tool, okay, go to www.dprotrader.com. Have your favorite drink on your side. Don't let your wife or your husband disturb you, and spend your time, okay, watching some videos at dprotrader.com about Pitchfork tool. So we need 3 points. So price goes up from A to B. It goes up from A to B and then pull back without coming to the starting point. We can apply the Pitchfork tool, the median line at the first point, the top of the Pitchfork tool right here, and the lower part right here. Now we have our Pitchfork tool. Now you see, now we start. This is it, okay? You want to use what we call advanced trading, you must use the Pitchfork tool. By the way, there was a comment on one of our videos. A trader was asking me if I'm drawing my Pitchfork tool, if he wants to know if I place it on the shadow. So you see here, this candle here, the shadow is always here. So because when I was talking about Fibonacci's retracement, Fibonacci extension, sometimes I ignore the shadow or the tail of the candlestick bars. But when it comes to Pitchfork tool, I put it right at the top. All right, so I think I clarified that question already. So, and as I said, I'll put it all the way to the top. Okay, I want to go, and I want to make sure it's exact. All right, I try to be a little bit exact with that. You see here, I stop here. So sometimes they say, John, why don't you go here? No, I prefer here. All right. Okay, so now I have my Pitchfork tool. Look at that. So the Pitchfork tool, now, if you haven't been following us, you will know this, okay? The Pitchfork tool allow us to determine the possible path that the price will take. Isn't it great to know where the price is likely to stay? It's likely to stay within the boundaries of the Pitchfork tool. So after this move here to here and this pullback, we know that this currency pair, the Euro Turkish Lira, has a high chance to stay within the boundary of this Pitchfork tool if the bullish momentum is intact. All right. So look how the price reacted to the edge. So he went up to retest the edge of the median line of the Pitchfork tool. Look at the reaction here. So this is very, very interesting, and I will be hold on a second. And I find it very interesting what is happening here. You can see here that the price came to the edge of the Pitchfork tool, but did something else. Look at that. Okay, can you see what I'm talking about? What I recommend to traders, whenever you put your Pitchfork tool, also draw the median line of each half of the pitchfork tool. So the pitchfork tool is formed of two halves. So you want to place the median line. So this is the first half. This is the second half of the pitchfork tool. So by drawing the median line, you see how the price pierces through the median line into the second median line, which is the blue line here. The second median line is the median line of the top half of the pitchfork tool. Can you see that? Pew! Or they were placed there to sell. Now, you need to understand what's going on, how the smart money trade, the smart money will buy at a specific price, all right? And they will sell at a specific price. So they'll say, I want to sell the euro Turkish lira because of fundamental reason, all right, blah, 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 blah. They use fundamental reason, and they want to sell it here. At which price? 32687, all right? And they will just place order there. But because the orders, this is what, if I don't want to get into trouble, because there was one gentleman they arrested in London, okay? You see, last year or year before, in Hounslow area, they said the gentleman was manipulating the market by placing down some, ghost, so to speak, some ghost orders to fool other market participants. But what is happening, what this gentleman understand, which was very, very smart, but I don't know anything about this. I don't want to get involved. I don't know this gentleman. But what he was doing is because he understood how the market functions. The orders, the market orders attract the price. And for stock traders, you want to understand that. You want to know where are the orders. Orders are very often on the edge. So here, you don't need any level 2 or blah, 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 or level 3. The price will tell you. The orders are placed here. Phew. Orders were there. Those orders were filled and the price quickly come back down. You want to know that they sold it already. That's why I was saying to you all the time, I don't want to be the first person to sell or to buy. I want those who are moving the market to buy or to sell first, and we want to follow them. Here, they sold it first on the edge of the median line of the first half of the pitchfork tool. Now, this is where we will sell. You see here, he pulled back inside, braced back below the median line, and then retest it here. At this point in time, we implement a top-down trading method. So, you implement, you sell it. Where is it coming down? To the red trend line on the edge of the... Can you see here now what's going on with the pitchfork tool also? Will that be useful? Look at my pitchfork tool again. Look, where are we now? We are here. The price, you can see the price braced below, okay, the lower part of our pitchfork tool, and it retests many times here. Boom. Day traders should take advantage of this. You hear? It bounced on the edge of the pitchfork tool. Here it came back down, it bounced again on the edge of the pitchfork tool. Here again, pulled back, it bounced again, and so on. Now we are again here. So now it finally went back inside the pitchfork tool, and now it's sitting here, so to speak. Prior to bear a signal below the orange trend line. Are you getting it now? Trading on the edge. Now, will you promise me, all right, that you will start, okay, incorporating the trading on the edge into your trading arsenal? Now, you do not have to promise me anything, but think of it. Will that be useful? All right, that's the question. Okay, will that be useful to your trading? All right, because it's pointless to keep losing if you keep losing, all right, all the time. Either you can stop, it's your money, you can stop. Well, yes, you can stop, all right, go back to the blackboard, or you can start minimizing your losing. So if you are losing £1,000 a month, at the end of the year, that's £12,000 nicely lost. What can you do with 12,000? That's the question. A lot. Okay, now, so you may decide to start taking some action, reducing the loss, controlling the risk, and by trading on the edge, I think it's up to you. I think that will be useful. So you may start mapping out the market, know exactly what's going on, so you don't jump into the trade. All right, jumping into the trade means that you just enter the trade and you don't know where you are and what is going on and where the price is heading. This is about jumping into the trade, because probably, as I was doing myself before, stochastic overbought, stochastic oversold, You try it on the 5 minutes, you try it on the 3 minutes, you try it on the 5 minutes, you change the setting on the stochastic, and it's just so tiring, okay? So tiring and frustrating until one day, all right, your eyes are wide open and you start seeing two things. Okay, now you start seeing that, all right, in fact, I should be trading the price, not the indicators. I should be drawing the trend line. I should be drawing the channel. I should not violate the market pattern. I should not overtrade. I should control the risk. I should reduce the loss. All right? Or I should stop trading altogether. Okay? And so on and so on. All right? Okay. So I think you get a message. So you see that, okay, that's beautiful, isn't it? Okay, that's beautiful, gorgeous, beautiful, all right? Okay. If we can make this more interesting if we start adding more tools like for instance, okay, Fibonacci extension. Okay, let's play a little bit with it. Okay, so applying Fibonacci extension to this price action. We want to know where is the 138.2% Fibonacci extension level. Here it is. Price break through it, try to retest it here, but on the edge, look at this intersection between the 138.2% and this trend line that we see here, where we have, you remember how I draw my blue trend line? It's not by mistake the price stopped here. It braced above, it was acknowledging that 138.2% Fibonacci extension level of this price move on the what? Edge. Now I hear you. You said it on the edge. All right, on the edge. Breaks a bull, retest on the edge. All right. So I will try one more thing, and then we will wrap it up. Okay. I think you get the message now clearly and neat. And you also have promised me. All right. You did. All right. In your mind, probably you didn't say it, but you did. All right. It is to cheer you up a bit. Don't think that, okay, cheer you up. So now I'm drawing again. I'm putting my pitchfork tool in a different way. You can see that price goes up from point A to point B, and then it pull back to point C without coming to the starting point. Is that correct? That's how we draw the pitchfork tool. Now you can see that the first time that we draw a pitchfork tool, you see the reaction of the price near the median line or the first half of the pitchfork tool. That was this section here. Now look at my new pitchfork tool. Let's put a bit of color. I'm going to change the color of my pitchfork tool so everybody can see it on their chart. What's the beautiful color? Can we use orange? No. Yeah, I have another orange line there, so I cannot use orange. Green. Okay. Okay, turquoise. Okay, so you see my turquoise pitchfork tool. This is my new pitchfork tool. Look at the reaction here. Where is happening? Yeah, on the edge, yes or no? So that high, you remember we were drawing the orange line by connecting this point and this one here. That's how we have drawn our orange trend line. But in fact, what was happening is that the price rally up to the edge of the median line of that turquoise pitchfork tool. Look at that, on the edge. Now, we are saying it together now, on the edge. You see here? And then pull back again to retest. So, you remember the blue trend line, we were drawing it, connecting this point, and this one here. But the third time, it was coming back to retest it. In fact, the price found a resistance on the edge of the median line and pulled back to the lower part of the pitchfork tool, that turquoise pitchfork tool. All right? So, you can combine the trading on the edge with the stochastic, with the MACD, with top-down trading method, and you will start, okay, making better trading decisions. All right. So if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. One more time, let's try to apply Fibonacci extensions, okay, to this price action. You see here, from the beginning of the pitchfork tool, from the point A to point B. All right. Try to do that also, okay? All right, what are we looking for? We want to highlight the 138.2%, the most powerful Fibonacci extension level. Here it is. So this price action from here, are you getting it now? from here to here. All right, we apply Fibonacci extension to that on the weekly chart of the Euro Turkish Lira, and we highlight the 138.2% Fibonacci extension level. You get it now? So where are we now? Here, this is 138. The price breaks above that 138.2% level, and now is retesting it on the what? On the edge. Now you get it. Also on the edge of the blue trend line, and also on the edge of the orange trend line. This is a spot trading zone. Prior to bear signal below the orange trend line. But also remember the level of 36244. That's the 138.2% Fibonacci extension level of the price action from here to this point here. You get a message? Alright, you get a message? We can again put our pitchfork tool like this. Okay, one more time. Pay attention carefully, my friend, because I want you to get this once and for all, so you may start trading like a pro. You can place it like this. Alright? Price goes out from A to B and then pull back to point C without going to the beginning. Alright? Or we can even put it here. Say price goes out from here to here and then pull back without going to the beginning. Okay? On the edge. On the edge. Okay? So if you have any questions or suggestions, all right, put in the comment section. And as always, I read the comment. You may think that, George, you are not replying to my comment. I do read all the comments. And that's how I keep recording videos regularly, because of the question or the suggestion that traders are making. We are now on the edge of our turquoise trend line that I put here. And prior to bearish signal below the orange line, prior to bullish signal above that orange trend line. We wish you the very best in your trading, and until the next time, enjoy yourself and be very, very happy. We are the TSTW24 traders, talking about trading on the edge explains. Happy trading to you all, and speak to you very soon.